Hello, and thanks for joining us for the latest installment of Wall Street Buy, Sell, Hold. If you journey to the key mineral districts of Nevada, which just happens to be the world's fourth richest gold region, you wouldn't have to go too far before you came across a project operated by Rye Patch Gold. Joining us now is Bill Howell, CEO of Rye Patch Gold. So, Bill, how did this modern gold rush and Rye Patch Gold get started?
Well, thanks, Patricia and Chris. Thanks for having me on. Yeah, the gold rush has actually started back in about 1980. And since that time, there's been over 180 million ounces of gold produced out of Nevada since that time. So Nevada has really been at the forefront of this modern-day gold rush.
And where exactly are your properties located in Nevada?
All of our assets are in Nevada. Most of are along what we call the Oriana Trend, which is really an emerging gold trend in Nevada. We're just right alongside Interstate 80, which is a 4-lane paved highway that goes from San Francisco to Chicago. On our property, we have water and power, and nearby, within 5 miles of the project, we have people in the town of Lovelock, Nevada.
What other things would you say make your company different than some of the other competitors out there that might be interesting to investors?
Sure. There are a lot of junior mining companies in the sector, and there are a number of different business models. One of the business models is what's called the project generator or joint venture model. In that case, a company acquires some land that they think is good, and they joint venture it with another company. The joint ventures are generally like a 70-30 joint venture, so that company has given up 70% of the upside of that project. On the other hand, our business model is to develop our own resources. So we control 100% of the lands. We develop the resources ourselves. And as I like to say, you know, exploration, you have to go out and try to discover something, and you have to find something. And I think that's where Rye Patch has been very successful over the last 4 years. We've actually identified 4 million ounces of gold, 1.2 million in the measured and indicated category, and 2.7 in the inferred category. So, you know, you can go out and look all you want, but occasionally you have to find, and I think that's what sets Rye Patch Gold apart.
All right, so speaking of indicated, inferred, and measured, those are simple words, but sometimes it might complicate people.
Well, just as you indicated, Chris, those are levels of confidence. So inferred is the least confident amount of material. We know where it sits, sort of what the geometry is, but we're not really comfortable with the numbers. Indicated, we've tightened up and we know the geometry, but not necessarily the full extent of the mineralization. And measured is the most confidence level in that we know the geometry, we're certain of the grade, and we know exactly where it sits.
So essentially, these major mining companies have reserves. They go out there with their bulldozers, they extract this out of the ground, and eventually they're going to cultivate or extract their resources. And then they would go to a junior mining company like you, which has a reserve or a resource of 4 million ounces gold equivalent, and you would sell that to them.
That's
so
right.
You're mapping it, and you would sell your inventory to them. And is there a critical size that you need to get to before you would consider selling? And if so, is there a dollar value or denomination that would be worth to an investor or to you as the owner of a company?
Recently, there was a transaction done in Nevada where a company paid over $400 per ounce in the ground. That company had about 5 million ounces of gold in Nevada. We're sitting right now as Rye Patch with about 4 million ounces of gold. So we think the hurdle is to really get over that 5 million. We'd like to get to 10, but what we're hoping is that we can get over that hurdle of 5 million, and that's going to put us on the radar screens of a Newmont or a Barrick. Once we do that, if you look worldwide, over the last 12 to 18 months, there's the deals that have been done. If you throw out these outliers like $400 gold per ounce, but you just kind of take the average, you end up with $50 per ounce in the ground. Right now, Rye Patch is trading at $12 per ounce in the ground. So that's the value proposition for shareholders right now. Every share is backed by an ounce of gold in the ground, right? So a lot of people, you know, it's hard to go out and buy an ounce of gold at $1,600 per ounce at today's price. But it's really easy to buy a 50-cent stock. And that stock has a very good option value to the gold price. So as gold price goes up, Rye Patch Gold shares should go up. As the value of Rye Patch gets recognized, the in situ value of those ounces in the ground ground should go from $12 per ounce to the average, which is around $50 per ounce. So we could go from a market cap of, say, $40 million up to a market cap of over $200 million.
And of the property that Rye Patch owns, how much is untapped? Like, how much still needs to be explored?
Well, right now we have 3 million ounces of gold and 40 million ounces of silver. All of that really sits along what we call the Oriana trend between two projects, which is Wilco and Lincoln Hill. Now, we have acquired lands in between there, which we call Gold Ridge, that are very prospective. But what we're trying to do is build a district, and we think that district has potential for over 20 million ounces of gold. As I mentioned earlier, between Barrick Gold, Rye Patch, and Coeur d'Alene silver mines, we've discovered over 10 million ounces of new gold since April of 2009. So it really is an emerging trend. In addition, last September, we acquired a new property called Garden Gate Pass. And that property is just south of one of the largest gold mines in Nevada called Cortez Hills, operated by Barrick. It's roughly about 7 miles to the south along some of the major structures. My background and the background of some of the geologists that work for the company, we have some intimate knowledge of what we call the Cortez trend, and we believe that the Garden Gate Pass has significant potential. If you look at the deposits that have been discovered to date, they range between 5 million ounces and 20 million ounces of gold. So we're in elephant country.
I guess as an exploration company, you need money. It costs money to hire people to go out there, drill, and map. How is your financial structure? Are you cash rich? Are you debt laden? How does your balance sheet look?
Right now we have zero debt, and we have roughly $7 million in the bank.
And as far as running a junior mining company, a lot of investors, certainly people that look at these small aggressive stocks, they want to make sure that you have skin in the game, aka your own, cash on the line.
Right.
Is that the case with Rye Patch Gold?
Management owns about 10% of the company, and we feel we're buyers in the market. I mean, we think it's very much undervalued. When, like I said, if you look at our ounce, what we're getting per ounce in the ground of about $12, and the average is $50, it makes sense to be a buyer.
What would happen if gold went to $2,000 or $2,500 an ounce? What would that mean to the $50 potential sale price? Would that go up to 60 or 80 or 100? Is that possible?
Again, each share of Rye Patch is backed by some ounces of gold in the ground. So as gold price appreciates, the option value of those ounces in the ground appreciates.
Technology has changed just about every industry that we can think of today. How has technology changed your business?
To get to those sweet spots on the ground, we use satellite technology. We have a variety of new lithogeochemical packages that we can run, and just an advance in modeling of known gold deposits has helped immensely.
And obviously we have a stock show here, and we want to introduce investors with potential home runs, golden opportunities that have yet to be discovered by the large firms. Do you have any partners? Are there any majors that have either A, partnered up with you or looking at your company as a potential future investment?
What I can say is if you look at our share structure, about 60% of the outstanding shares are held by gold institutions or gold funds and institutionally.
Really?
Our largest is a fund called the Sun Valley Master Fund out of Sun Valley, Idaho. They control about 15% of the company. Mm-hmm. If you also look at gold miners that have been involved with us, Ken Ross Gold holds about 15% of the company. So right there, just those two individuals or two groups hold 30% of the company. You've got management with 10%, and we've got a number of other gold funds and institutions that hold the remaining 20%.
I've been to your properties, and you've got some majors that are surrounding you just over the hills within a half mile or a couple of miles. Which companies are those exactly?
Yeah, in the district along with us are Barrick Gold at their Spring Valley.
Everybody knows Barrick.
Sure, they're one of the world's largest gold mining companies. Coeur d'Alene Silver Mine, which is the largest open pit silver mine in North America, sits immediately adjacent to our Lincoln Hill and Gold Ridge properties. And then Newmont has scattered lands throughout the district as well. So we've got some very good neighbors.
You have a good balance sheet. You've got blue chip partners, large institutions. You've got great properties with resources that are in the bank or in the ground. What's next for Rye Patch Gold?
Well, our goal is to get to 10 million ounces of inventory of gold and silver in Nevada. What we hope to have happen is that we'll get on the, as we build the company, we'll get on the radar screens of these larger gold mining companies, and the ultimate goal for investors is the company would be purchased.
We see there's about 120 some odd million shares outstanding. Are there any options or warrants out there which would A, cause a little dilution, but also give you additional inflow of funding?
Right. There are about 12 million warrants that come due on, oddly enough, December 24th of this year. So if those are all exercised, that'll bring in $4 million into the Treasury. So a little bit of dilution, but some cash to go with it.
What's the price of those options?
They're priced at 35 cents, so right now they're in the money.
So we could probably equate, if you're valuing your stock price at about $12 per gold equivalent, and most people are being valued at $50, so you're probably 25% of what your realistic value is. So your stock is
right.
undervalued, and you could realistically support a $2 stock price.
That's correct. I mean, if you just do the math and, like I said, look at the deals that have been done over the last 12 to 18 months, that's what you'll find is that the average is $50. We're getting about 12. So right there, you know, if once we get the word out and we can get some exposure, which is part of this show, that we can maybe see that value gap be you know, so that's a five-banger right there, as they say.
So, Bill, give us some background on the management team and also tell us about the geologists that you work with.
The geologists that work for Rye Patch, we're truly have the opportunity here of a lifetime. I call them the dream team, in that they've either been part of or led teams that have delivered over 80 million ounces of gold to the portfolios of companies like Placer, Barrick, Agnico Eagle, Santa Fe Pacific, and now Rye Patch.
I'm looking at other companies that have been purchased in your industry or acquired.
Right.
Large companies, mining companies need to find more resources. They would come in and pay approximately industry standard of about $50 per ounce or even up to $400 per ounce. So at $1.50, $2 is your cost per ounce. You've got a big profit margin there from 2 to 50 cents.
That's correct. I mean, the hope would be that we would eventually get to that $50 per ounce in the ground. That would give us a market cap right now of about $200 million. That's the value proposition immediately in the stock. And then with a purchase or a buyout, you would hope that you could get another 25 or 30% premium on top of that.
Now, when you drill and you uncover the gold, how do you prove to people, this is what we see, this is what's down here? How do you illustrate that for folks that aren't there?
One of the things we do is we sample every 5 feet on the drill rig. So our samples are 5-foot composites of the drill rod. The drill rod is usually 10 feet long, so there's 2 samples per drill rod. Mineralization on our property starts immediately at the surface, and at Lincoln Hill goes to about 500 feet. At Wilco goes down to 1,000 feet. So we drill those holes down to, we get to a certain horizon that we know is not mineralized. All that material is then, there's a small sample that's collected by the geologists. Those are our character samples that the geologists log. They log the color, the rock type, the formation, the alteration that they see. The other sample, the larger sample, is picked up by an independent third-party assay laboratory. In this case, it's American Assay, taken to Reno. They perform all the fire assays. To verify that all the material is correct, we insert standards and blanks. So these are material that we know the answer to, as well as blanks of material that we know that there's nothing in, so that we can track the quality of assays back from the lab. All of that information is given to an independent third party who validates it and then does our resource estimates and writes a report called a National Instrument 43101, which is the gold standard of reporting, pardon the pun, those ounces in the ground. Right now, we think along the Oriana trend on the properties that we own and control, that we have potential for 6 or 7 million ounces. At our Garden Gate Pass project, we believe there's potential for up to something like 20 million ounces, again, very early stage. And we're always looking for very good acquisitions that would be good for shareholders.
Japan had a tsunami, and I believe it did shut down some mines because of that natural devastation. How does that help or hurt you?
Well, again, if you go back just to simple supply and demand fundamentals for gold, you know, with China and India, and again, some of the older mines shutting down, you're looking at supply almost matching demand. And as those middle class grows in those countries, you're going to see demand outstrip supply because there's a finite amount of gold. And as I like to say, if you know, if it were easy, it'd be $1.60 a sack instead of $1,600 an ounce.
Final word for those people that watch television shows, sell your cash for gold. Is your advice to them buy, sell, or hold?
I would say hold.
Thanks, Bill.
Thank you very much.
And you can find out more at ryepatchgold.com, or for more information, contact your investment advisor.
If you can hear this transmission, you are part of the resistance and you are not alone. We are outnumbered but not outsmarted. We are taking Florida back in the streets, in the air, in the water, and we have infiltrated the airwaves. We know you're tired and looking for a better taste, so you must join the fight. We have the answer. It's in your DNA. DNA Energy Drink. We are the revolution.
Welcome back.
Our next company today has a lot on their plate because they're entering into the $9 billion energy drink market. And as you know, Red Bull and Monster dominate this sector. DNA Brands is penetrating to this market with a profile that investors are finding increasingly appetizing.
And they're also cutting into the profitable meat snacks market, dominated for years by the likes of Slim Jim and Jack Link products, with ones that they claim are both better tasting and better for you. It's easy to see the culinary and financial appeal that could be there. Well, here to share his bounty of knowledge about this growing brand of products is CEO and founder of DNA Brands, Darren Marks.
Darren, I'm really glad you could make it here today.
Thanks for having me on, guys.
Darren, I got to tell you, you're up against some pretty hefty competitors like Red Bull, that does about $6 billion in revenues, and Monster, that does about $2 billion in revenues. How did you break into this very fast-growing, profitable sector of the beverage industry?
Well, our big break came in 2009, Chris, when Monster Energy left Anheuser-Busch in favor of Coca-Cola, leaving Anheuser-Busch, the entire network, without a viable energy drink. So they formed an SBA committee looking to replace the revenue that they lost in a fast-growing energy drink category. We interviewed, we went through quite a bit of due diligence, and we were awarded the preferred vendor status with Anheuser-Busch. And we've been fortunate enough to say that we've been distributing through most of the Anheuser-Busch network in Florida, and we enjoy a great relationship with them.
I've tried the Monster, and it really doesn't taste that great. I understand that you won an award, actually, for your product as the best-tasting energy drink. Can you tell us about that?
We're very proud of that. Actually, in 2010, the World Beverage Competition in Geneva, Switzerland, held a competition for the best-tasting energy drink. 900 applicants submitted. It's a blind test, so it's not sponsored or paid by the bigger companies. It's a true test of the world's best-tasting energy drink. And I'm proud to say we won that award because of our quality ingredients and our taste. If you would try a citrus, and I know both of you tried it before the show, it tastes like an orange soda. Our lemon lime tastes like a Mountain Dew taste profile. And we have two sugar-free products. We have a sugar-free citrus that tastes like a sugar-free orange soda, and a cran raspberry.
You have a great product. You've got incredible distribution through Anheuser-Busch, but this is a major player out there. I mean, Red Bull they're the biggest. They're the big dogs on the street. I've heard they're even firing some of their distributors to do self-distribution to essentially cut out the middleman and increase their profits. How does this benefit or help you?
It's a huge benefit for us, and you're exactly right. Red Bull is taking back a good majority of their distribution. They've already terminated the top 25 distributors in their biggest markets. They're on their way to doing 50, their top markets, and eventually they're going to be taking over the whole United States. So imagine if you had a Red Bull distributor distributing Red Bull for 13 or 14 years, is now without Red Bull. They grew up in the energy drink business, that's all they know. So it's a great opportunity for us to bring DNA with a proven track record in the state of Florida and other states that we're selling in with Anheuser-Busch as our partner, and getting into the big chains, getting sell-through, and having the ability to bring that to them is a huge benefit for us. When Monster left Anheuser-Busch, it left them with a huge hole in their revenue with the fastest growing segment of the beverage category, the energy drinks. So they're trying to replace that business. So we're with Anheuser-Busch in some areas. We have Red Bull distributors in other. And then the other big opportunity is Miller Coors. As you know, they don't have an energy drink right now. We're in Wisconsin with them. So the three top situations that exist out there for distribution, DNA is positioned very strongly with all three.
All right.
And that's really contributed to a lot of our recent growth.
All right, so these guys got into the business. Red Bull was obviously the first to market, very much like 5 Hour Energy was the first to their market, and they became the biggest and the best. And this is almost impossible to penetrate this market because everybody knows 5 Hour Energy shot. These guys were first to market. They were very well funded, not a great product, but clearly a dominant market leader. Now we also understand you're really developing Florida. Walgreens stores, you're in every single Walgreens store in Florida, and Circle K, and Racetrack, and 7-Eleven. How much more growth is there to happen in Florida?
Well, actually, if you break down the state, we're in about 9.5% of the total distribution that's out there. And we do have every Walgreens in the state of Florida and the liquor stores attached to it. We have every Racetrack and Circle K, and we're in select 7-Elevens. And that's only 9.5 to 10% of the distribution. So we have a long way to go to get our pods, as we call them, points of distribution, up to 75, 80% where we think Monster, or where Anheuser-Busch brought Monster to that level.
Could you have gotten where you are today without winning the World Beverage Competition and without the help of Anheuser-Busch?
I mean, winning that award was a big deal for us because everyone recognizes the World Beverage Competition as a legitimate, honest competition. So we used that on our point of sale, and it was a big selling point with the buyers of the chains. Anheuser-Busch has been our big brother. You know, when you're out in the streets doing battle with the Coke and Pepsis of the world, and they know Anheuser-Busch is distributing DNA, or Red Bull, former Red Bull distributors distributing DNA, or Miller Coors is distributing DNA, they have a tendency to kind of back off a little bit because they don't want to pick a battle with the giants. And not to mention, they have the great ability of getting placement in the stores. They have long, long relationships with these C-store owners, with the chains, and we leverage those relationships.
Tough question. Coca-Cola and Pepsi-Cola had AMP and they had Rockstar. They have not really done well. From my understanding, Coca-Cola has a $25 billion 5-year marketing budget for their products. They've had an energy drink and it really failed. How do you think that you could make this successful, or what have you learned from their failure?
Well, you're exactly right. They have failed miserably. And part of the failure is they go out and do national distribution because they have a model they have to follow. And even though it's Coke or Pepsi, if you put it on the shelf, it doesn't necessarily mean it's going to sell. Again, the slow, methodical growth going into a market, let's take Florida, for example, where we did the action sports first, we built credibility, then we stepped into the independent trade, built credibility there, got sell-through. The key to this thing is the brand selling. We can open up 15 states in the next 12 months, but I will guarantee you that 60% of it's going to fail because we don't have the manpower or the marketing to support it. So it's a slow growth. So if we go and take one step in front of the other and we build a brand, we are a very relevant brand in Florida right now. When people think energy drinks, it's Red Bull, Monster, and DNA. You know, those are your brands that are out there that are selling at store level. The buyers are bringing us back in the stores. Circle K, we're in our 4th year. Racetrack, our 2nd year. Walgreens, we're going to go into our 2nd year with them. That's the key, is to get sell-through, get the brand to grow organically. Build the brand with your core demographic, and then look to create items that are niches that are different than what's out there. Obviously, having the world's best-tasting energy drink, we were able to go out and create a brand that 900 other energy drinks were not able to do.
Well, I know a lot of people would normally drink these for effect, not for taste. So here they can get taste and effect, 2 in 1.
Correct. We often say you can actually have a sandwich with our energy drink.
I recently read, Darren, that you just got approved to be in the largest military commissaries in the United States, and these are APHIS, DECA, Nextom. Is that correct?
That's correct. Yeah, this is a really big deal for us, Chris. We were able to present to DECA and APHIS. Those are the 2 big buying groups for United States military. They cover all the military bases, whether it be commissaries or PXs around the world.
For investors that may be watching, what would you say is the single most important thing that you would like them to leave with today when they think of DNA brands?
Well, I think there's a couple things, but the number one thing for an investor is the opportunity that exists by having Coke distributing Monster and owning Full Throttle, and then Pepsi, of course, distributing Rockstar and owning AMP. And now, as I mentioned earlier in the show, Red Bull terminating a top 50 and soon to be the entire United States. There is a huge opportunity for a company like DNA. If we can stay disciplined, Patricia, and focus on these markets and continue to get the growth and the sell-through that we can build a national program with a mixture of Miller Coors, Budweiser, and former Red Bull distributors. So that's the opportunity, and I think our discipline, our marketing, and it's not just a one-shot answer, unfortunately. It's a combination of many things, but that's the real opportunity there. We have a lot of the guys that worked for Red Bull when they brought Red Bull over, when they couldn't give away a Red Bull. You know, to think about this. Yeah. They couldn't give it away. $2 item, tasted like medicine, quite frankly. They couldn't give it away. Now it's a $6 billion a year business that they've created, just Red Bull alone. Monster was $4 a share, Hansen's, and it went to $2.40 the equivalent, okay, by building market share. There is definitely...
$2.40 as in $240.
$240.
And it's split adjusted, now it's 85.
Right, and there's been many splits and so forth. I mean, I wouldn't know the exact dates on those splits, but I know it's split quite a bit. The opportunity for a small company like us to come out and take down $100 or $200 million of a $9 billion a year category with the help of Anheuser-Busch, Miller Coors.
You're not asking for much.
We're not asking for much, and it's very doable. But again, it's going to take one step at a time. We are raising money right now. We do, as I mentioned to Patricia earlier, have the opportunity to grow the brand. We've had a lot of calls from a lot of distributors. A lot of chains want to do business with us because of the success that we've had. So we would raise money, see what we would need, and then go out and execute on that.
Or if someone else bigger, like a Red Bull or a Monster, they could just buy you and you could disappear, or they could roll you into their own brand as a new flavor.
Absolutely. We've been approached by a couple investment banking firms that have gotten due diligence packages on us to kind of keep an eye on us. We're not quite at that point where I think they're ready to come in with something that we would be happy with. You know, we're about building shareholder value right now. We want to see our stock go much, much higher than where it is currently, and we think we can do that. But there's no question, as we grow, we will be a very attractive takeover for a company that wants to expand their line or wants to be in the energy category for a first time, because they're not going to be able to create a brand. Most companies can't, but they'll buy them and then put the money behind it and then grow it nationally.
The heavy lifting's already been done.
Correct.
Well, Darren, thank you so much for being on the program today.
Thank you for having me, and I appreciate you letting me speak about DNA Brands.
My pleasure.